It all comes down to today, doesn't it?
Nirmala Sitharaman, Finance Minister, has delivered her maiden budget.
That's Nirmala Sitharaman's first budget, and it packs quite a punch.
What is your single biggest risk that you foresee for the economy today?
To believe in itself and start moving.
Well, let me start the show by thanking you, the viewers of CNBC-TV18, where the channel has emerged as the most watched TV news channel on Budget Day. We were India's #1 choice with almost 60% viewership on Budget Day. And not just that, CNBC-TV18 beat competition in the budget week as well with 60% viewership. And when the Finance Minister spoke after the budget, we had more than 98% viewership. Now, CNBC-TV18 has been your budget destination for 19 years. The biggest voices on the market, economy and the top policy makers were on the channel. Now, CNBC-TV18 was not only the most watched business news channel, it was also the most watched English news channel. So once again, we want to thank you, the viewers, for the trust and continued support. Here's all the market action of the day then. Strong global cues helped the bulls make a comeback on Dalal Street. Nifty snapped its 4-day losing streak to end over 0.5% higher. The Nifty and the Sensex both posted their best one-day gain in the last 8 trading sessions. Broader markets rose in line with the benchmarks as the Nifty Bank snapped its 3-day losing streak. Survi Upadhyay, as always, is here with the wrap of today's trading action. Survi, the bulls finally turning up on Dalal Street.
Well, Thursday brought some cheer for the bulls. We had a pullback day. You could perhaps attribute a lot of this to short covering because Thursday is the weekly expiry on the Nifty and the Bank Nifty. And therefore, there was a move on the green side pretty much across the board. We had the Nifty, the Sensex, even the mid-cap index actually do quite well. Some of the stocks that have been beaten down recently, they saw a lot of traction. So, I mean, it's anyone's guess right now whether we have managed to hold the level of 11,500 or not, which is where the 100-day moving average comes in. But at least today, there was some respite. I'll talk about the sectors and the stocks that led this up move. There was good buying traction on some of the metal names because globally as well, markets were holding higher. So if you look at Nifty gainers, you will find stocks like Vedanta, JSW Steel, Tata Steel, etc. Most of them were on the upside. Zee and Dish TV, these were two very, very strong movers of the day. Perhaps the market is sensing that a deal is around the corner. If you look at what else worked well today, IndusInd Bank, which is reporting numbers tomorrow, is approaching those numbers with steady gains, 4% up on that stock as well. Autos in general had a good pullback day. Maruti, Eicher, Hero Moto, most of these names were on the upside. If I talk about what sort of the weak pocket of the market was, and IT for sure, there is concern after those TCS numbers, and we saw the profit taking continue on Tech Mahindra, on TCS itself. Of course, it's going to be all eyes on Infosys tomorrow, and let's see what that company can deliver. Coming to the mid-cap space, not a bad day at all because we did have plenty of gainers on the screen after a while. As I mentioned, Dish TV had a very, very strong session, 15 to 16% up on that stock. But beyond that, BEML, Jain Irrigation, these were some of the strong names. Then from the auto ancillary space, Motherson Sumi, even names like Bharat Forge, TVS Motors, most of them were on the upside. Last but not the least, if I talk about the one stock that continued to be in turbulence, that had to be Interglobe. Off the lowest point of the day, but still down 3%. So that's how the stock mix really shaped up. All in all, a good day for the bulls.
A good day for the bulls, then, Surbi. Thanks very much for bringing us a comprehensive report of all the market action. Now, here's a CNBC-TV18 exclusive. Cash-strapped Diwan Housing Finance stakeholders today held a meeting to discuss a resolution framework for the mortgage lender. Now, we learned from sources that banks have granted DHFL additional time to the tune of 7 days to present its final resolution plan to all of the lenders. Now, we understand in today's meeting, the bondholders, that is the mutual funds and provident funds with exposure to DHFL, the core group of lenders, SBI Caps, which is acting as the advisor to the lenders, as well as the promoter, Kapil Vadhavan, were part of the meeting where several bondholders raised concerns about the plan being collaborative so that they do not have to take losses on their exposure. We're given to understand that banks assured these bondholders that the resolution plan would be comprehensive, taking into account the interest of all stakeholders and value maximization for all that are involved in DHFL. Do remember, the total borrowings of the mortgage lender are to the tune of 1 lakh crore rupees, where banks alone have an exposure of over 40,000 crore rupees. Additionally, we're given to understand that the broad contours of the resolution plan were discussed with the bondholders, including a restructuring plan as well as some debt conversion and perhaps an additional line of funding. Now, the broad contours of what DHFL is likely to present is something that we had already reported earlier, but the final resolution plan remains to be seen, and it looks like there is some more time that has now been granted to DHFL to finalize what it wants to propose to the lenders. Now, shifting focus to the slowdown in the auto sector, M&M's Pavan Goenka has told CNBC-TV18 that the first quarter of FY20 is the worst for passenger vehicles since 2001. However, he is hoping for a quick recovery like the sector witnessed at that time as well. He went on to bat for the government stimulus, making BS6 cost inflation GST-free in order to prevent a fall in demand. Now, he also told us that the company has seen a degrowth of 15% in the first quarter and thus may have to revise the FY20 growth guidance downwards from 5% currently. Now, meanwhile, Autobody Siam has said that festivities should help the demand revival and bring the sector back on track.
Last month we had, I think, 4 to 5 days of shutdown, which means on a 25 days working, we are about 20% shutdown. Yeah, that's right, 20% shutdown on a 25-day working. And the month of July is looking better. I don't know right now whether we will have a shutdown or not, but even if we did, it will not be 5 or 6 days. It will be somewhat lower. The tractor, we had said 5% at the beginning of the year, and we have seen a degrowth of 15% in the first quarter. In our internal estimate, the first quarter was supposed to be small degrowth, maybe 5% degrowth, but not 15%. And therefore, looking at the next 9 months, the 5% growth will require 10% growth for next 9 months to get 5% for the whole year, and 10% appears very unlikely.
July typically is is not a very good month because of the monsoons and slowing down of various activities. July is till today not looking any better than June. So we are hopeful that September, due to festive season, should bounce back. With the inventory now under control, and hopefully the month of July also will lead to balancing of the inventories, I think the situation is only going to improve from here as far as the dealers are concerned.
Now, speaking of a slowdown, Axis Bank Managing Director and CEO Amitabh Chaudhry told CNBC-TV18 today that his bank is going to be careful about lending as he believes that some sectors are showing signs of stress. That's not all. He believes that they would have to adopt a more cautious approach when it comes to their growth outlook. When asked about the bank's fundraising plans, Chaudhry said that they will look at raising capital only when the right opportunity arises.
Generally, if you see the trend in the market, I think some parameters of the economy are definitely slowing down. I think the numbers for car sales came out yesterday, and they show a real slowdown. You are seeing a slowdown on the consumer goods side also. The credit growth is also a bit tepid, and you're also seeing some stress developing in the generally across sectors. So you have to be careful about just being out there and giving credit out. We'll talk about the growth when we have the opportunity to talk about it. But yes, I think I'll only say that we have to be cautious about how do we look at growth going forward.
So, but when you're being conservative about growth and talking about a slowdown, what is the need to raise capital? I mean, how much lending are you going to be?
We have not said we are raising capital. The only thing we have said is that we are taking an enabling resolution to look at raising capital when the right opportunity arises.
Are you looking to buy any NBFC pooled portfolios, and what do you make of the overall liquidity scenario?
So we have been buying NBFC's portfolios for the longest period of time. It's not something new which we're going to start because budget has talked about it. We will continue to evaluate if the right pools are available, and if it comes at the right price to us with the right kind of credit risk, we will look at buying. But that we've been doing in the past also. We don't anticipate that we are going to suddenly increase the pace at which we are buying these pools. As I said, we have to be careful given some of the trends which are emerging in the economy, and we will obviously, if the right opportunity comes along, definitely go after it. As far as the budget is concerned, I think it has given some clear signals in terms of what the government expects to see on the NBFC side. We are hoping that it can lead to some of the demand coming back. I think the finance minister has very clearly painted a vision and has backed that vision with some measures. Some measures will be rolled out over a period of time.
So my last question on the SR Steel verdict, are you a little upset about what has come out? Lenders are obviously going to challenge this, but what sort of precedent does it set, and are you going to be a little hesitant using IBC going forward?
Well, I mean, obviously the banks are talking about going to the Supreme Court and requesting them to relook at the judgment. It was a bit unexpected. So let's wait for the Supreme Court judgment before we start jumping to conclusions on whether IBC makes sense or does not make sense.
Now, Kalyani Rafale Advanced System, a joint venture between Israel-based Rafale Advanced Systems and India's Kalyani Strategic Systems, has backed a 700 crore rupee defence order. The contract is for the supply of 1,000 Barak 8 missile kits to the Indian Army and the Indian Air Force. My colleague Kevin Lee caught up with the chairman of Kalyani Group, Baba Kalyani, and spoke to him about the bigger picture regarding the defence orders from the Indian government. Here's what Baba Kalyani had to say on issues like the government's decision to scrap the Spike anti-tank missiles deal.
Mr. Kalyani, thank you so much for speaking to CNBC-TV18. Congratulations on this order. Now, about 2 years ago, you set up this facility in Hyderabad with an investment of about $5 million. That was meant to be for the Spike missiles. That order has not fructified. Is this the redemption of CRAS in your eyes?
See, that's the beauty of this business. If you focus on a product and you create a facility to assemble a product, and if you don't get that order, then you can't do anything else. If you focus on a process and creating process-related technologies, then if you don't get that order, you can do many other things. And that's exactly what we are doing. And that is our strength. That you create the capability to understand the process, the technology, and with that you can make many other products.
From a point of view of a defense contractor, however, what is your view on the progress that the government has made on these big ticket announcements? We mentioned Spike. There's the FICV project also, where we've not heard an update for some time, and the general consensus is that the government takes a lot of time for bigger orders while smaller orders keep coming in. Would you agree with this, and what do you think the government can do to better that?
Yes, a lot of time has elapsed for any big contracts to come in, but that's the way the defense systems work all over the world. It's not nothing special about it in India. Okay, I think everybody was on a euphoria that suddenly some big orders are going to fall in everybody's laps. It never happens that way. I think you need to create capabilities, you need to create facilities, you need to create products, they need to get tested, the user has to test it. This cycle is a long cycle, it's not a short cycle.
All right, from motor to the aviation space then. Indigo continues to reel under pressure. The stock closed more than 3% in the red after news of a spat between its promoters broke out on Tuesday. We are now given to understand that the market regulator SEBI has called Indigo's company secretary for a meeting and sought a response to the ongoing spat between Rakesh Gangwal and Rahul Bhatia by the 19th of July. Meanwhile, reports suggest that Indigo's shareholder pact will be checked by the government. Also, the agreement between Gangwal and Bhatia could be annulled if found in violation of the Companies Act. Do you remember the stock saw delivery-based selling of 400 crore rupees just yesterday?